The forecasts of Bitcoin have never been accurate. No one's been able to forecast its volatility. And the speculation that it was going to be a hedge against inflation was just flat out wrong. And that didn't work. And maybe it will work one day, but I'd argue that the volatility on Bitcoin is going to remain very akin to what Amazon was for its first 15 years, 30 to 50% corrections every 12 months, because there was no institutional support in the early days of Amazon. It was a retail product as people that started to use the service bought the stock. That's the same right now for Bitcoin. There is no, people talk about institutions owning it. That's just not true. They don't own any of it, and they won't until the SEC rules on it.
Hello and welcome to Wealthy Value. In today's video, Shark Tank investor and chairman of O Shares Investment Group, Kevin O Leary updates about the key reasons behind massive volatility and crashes in crypto markets, his long-term outlook for Bitcoin, and whether or not we are in a crypto winter. Kevin also highlights the possibility of banks getting squeezes and if there are any safe investment options left out there. Kevin O Leary said that he is bullish on crypto, especially Bitcoin, and predicts that it will remain volatile. He thinks that the assumption that Bitcoin would be a hedge against inflation was just flat out wrong. He said that Bitcoin predictions have never been accurate, adding that no one could accurately forecast its volatility. Make sure to stick around till the end of this video where Kevin reveals chances of a correction and market bottoming anytime soon. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
First, I would say, including anybody that wants to make forecasts about when the start of a recession happens, they simply don't know. And nobody knows right now because it's really hard to read the tea leaves in this market. And so the question that everybody, including me, has every day when I see a correction like this, when I see Walmart down 20%, for example, which is a bellwether stock, if I'm an opportunist, I might put on a position. But what I'm doing right now is I'm waiting for the big event, as I call it. And you get these events, and we talked about it. That day will be an interesting day to put 130 or positions on. It'll be a day of panic. We'll be down somewhere between 2,000 and 3,000 points. And yeah, it's horrible to talk about it, but that actually is very healthy, very, very healthy. I think this is actually a maturation process for the crypto market. There's two basic baskets of crypto projects. One, highly speculative tokens, and you could say UST and Luna certainly fit that because they've been repriced dramatically. Highly unlikely in the context of stable coins will they ever return to their old prices, because people have figured out a stable coin should be stable. And that means it has to be backed by something of asset value. You can note that USDC did not correct that way. In fact, during the period of this mass correction of other algorithmic or other quantitative or speculative stable coins that really got crushed, Circle, the company that issues USDC, was able to raise $200 million from Fidelity and $200 million from BlackRock. That's unprecedented in equity for the company. So that's signaling that that type of stable coin is favored by institutional investors versus the others, which look like they were retail products. So you've got all this speculative stuff. The NFTs have corrected. The Las Vegas side of crypto has had a nightmarish correction. It's not uncommon each year for Bitcoin to give up 50% of its value, and that's certainly been the case here. Ethereum, same thing. And so that's the volatility that will be inherent in crypto until there's policy. I remain bullish on crypto from the perspective of productivity. And so I think if you're buying projects, and I've always said this, Bitcoin is not a coin, it's software. Ethereum software, Solana software, Helium software, Pollen is software. All of these different projects around different sectors of the economy. Solana may be better ultimately for transactional speed because Ethereum is pretty slow. So we don't know which one of these projects is going to win. But the whole premise is that you want these for financial services. And I still believe that in 10 years, crypto will be the 12th sector of the economy, but all the existing tokens will not exist. There'll be many that just go to zero because they were highly speculative, they were fun, they had no real intrinsic financial services value. But if you were to ask me about USDC and say, look, Where's the value of that? Well, first of all, you can stake it or loan it at a 4% rolling annualized yield every 30 days, and that's valuable in inflationary times. Secondly, it is a highly effective payment system because I am now accepting payment for goods and services in USDC. I cannot buy more than a 3% weighting in any mandate of USDC because my regulator, or my compliance department, I should say, treats it as a highly volatile equity, as evidenced by what happened to Luna, what happened to UST. So they're looking at that, not differentiating the difference between those two tokens. So they're saying, look, you can put on a 3% weighting. So in the case of that particular mandate, that was $7 million. So we moved the $7 million out of the account into a USDC account. Right now, I'm staking it out at 4% for 30 days. They came back, gave me double B corporate credits for 3 years at 3%. And I said, why would I ever do that? You're not competitive. You've got to meet me at 30 days for 4%. And then they sent me all the articles about the correction of Luna. And I said, Luna's not USDC. These banks are now finding themselves getting squeezed because people are figuring out they're not advancing enough into understanding how crypto works. And their clients, I'm just one client, are moving millions of dollars out of their account elsewhere. And I said to him, look, you can bid for this money anytime you want, but you have nothing of value to me if I have to pay 100 basis points less and tie up my money for 3 years and a double B corporate credit. You're not even competitive. You're not even near what I can get. So there you have it. No, generally a bottom, and I've seen this movie so many times before, is you need a big institution to go bankrupt. That always helps. I mean, you have to sacrifice an institution to get this to work, because then you get a dramatic flushing of equity positions as panic sets in. Margin calls are called in, shorts, are bought. They basically bought themselves in already, and then you get this big leg down. Usually it's 5 to 10%, and that is the bottoming process we need. Now, this time I was thinking it might be in the crypto space, but that's already been decimated, and so it may be something else, a financial services company, or there was some rumors about Coinbase that turned out not to be true, but somebody's offside somewhere on a leveraged hedge position. You just don't know who it is yet, and they're big. And we're going to wake up in the next 10 days, 20 days, and you're going to find out they're a zero. That's a good thing. And I'm waiting for that to happen because we're getting close to a bottom here. It usually happens in financial services where somebody was trying some strategy, a leverage strategy. It's always leverage that does this. Or a hedge fund. Hedge funds, a good hedge fund that loses 10 or 20 billion, that's also good for flushing. And that's happened many times before. These are guys that have never seen this kind of a market, so they set up a position that went awry, couldn't unwind their leverage, and they just get wiped out. There is some institutional ownership in the Canadian market by Canadian institutions because they can use the ETF and equity mandates. But that's Canada. They were the first to allow an ETF with Bitcoin as the underlying. They also allowed an Ethereum ETF. And so those are positioned, but they're inside of equity mandates. The actual ownership of Bitcoin itself remains elusive to the institution because of their own compliance departments. And on top of that, no infrastructure for compliance. There's no way to market into any of these systems the price of Bitcoin, or whether it's levered or not during the day, the way you can with stocks that have been treated that way for decades. So there's so much work to be done. No, we're having a garden variety correction. Valuations got stretched. There was tremendous liquidity in the market. You got to remember, prior to the pandemic PPP programs and all the support in printing $4.5 trillion, this was standard volatility. It wasn't uncommon to have the VIX past 30. And we forgot about it. A whole generation of investors forgot or never learned what volatility was. Well, welcome to volatility. And now it's affecting many different sectors with the exception of energy for obvious reasons, but each sector seems to get maligned every second week. And so the whole market's PE is being taken down with the uncertainty around inflation, Ukrainian war. And this has been talked about for weeks now, but there's no safety in saying I'm going to go hide in Walmart, for example. You just lost 20% there. That's because the market's trying to figure out what comes next.
Kevin O Leary, also known as Mr. Wonderful, also says that U.S. crypto regulations will not come out until after the midterm elections. He explained that President Joe Biden is not interested in discussing crypto when his approval ratings have sunk to record lows. O'Leary also cited other factors, including double-digit inflation and high food and gas prices. So if you agree with Kevin that we hit a market bottom, tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video.